Welcome back to the Harneys Fund Download podcast series. In our first episode, we explore the fundamentals of setting up a parallel fund structure across Luxembourg and the Cayman Islands, looking at why asset managers choose this architecture to access both European and international investors. Today, we are taking that discussion a step further. We're going to focus on a critical piece of the European leg of that structure, the Alternative Investment Fund Manager, or AIFM. Specifically, we will be looking at the third-party AIFM model, what it is, what it does, what it matters for managers based outside the EU who want to raise capital in Europe. My name is Stefan Karolczyk. I'm a funds partner at Harneys, based here in Hong Kong, and I'm very happy to be joined today by Danny Howell, Managing Director Asia Pacific for Fundsight, formerly known as Lemanic Asset Management. Danny, very happy to have you with us today. Can we, before we get into the substance of it, just go into your personal background and speak a bit about Fundsight, your presence in Asia, the type of clients you work with in this part of the world?
Yeah, for sure. Thank you, Stefan. I look really grateful for the opportunity to be here and represent Fundsight. So thank you for that. So just in terms of myself, very quickly, I've been here in Asia for 15 years now. So based in Hong Kong, working across Asia from Australia originally, but working here in the region in roles that essentially leading and building businesses in that wealth and asset management space. Fundsight's interesting. So long history starting out as a single European family office and growth into where we are today. In essence, what we do in the simplest terms with Fundsight is we help our clients, asset management clients, raise capital in Europe. And we do that through two ways. One, we help them establish under our licensing fund vehicles in Europe. And then secondly, we support selected clients for fund distribution. Quite a focused strategy. So we're focused in terms of looking at mid-tier clients in terms of size, but quite happy to pick up smaller size clients as well. We're focused in the sense that we're not a broad one-stop shop in terms of service provision, so no admin or depository. We're very focused on specialist AIFM Manco services. And then thirdly, and quite distinctively, we provide distribution support to selected clients to help them raise capital in Europe. So we consider ourselves more as a strategic partner for our clients. We think that's quite a compelling combination in terms of value proposition for clients, and it's a successful model. We've got around 36 billion euros in assets. We've got 80 people in our head office in Lux. We've got offices also in London, Portugal, New York, Paris. Elsewhere, certainly here in Hong Kong, where I'm based, a good portfolio of clients across Asia Pac. So here in Greater China, eFund, Full Goal, CSOP, ComGap. In Japan, we include Daiwa and Asset Management One amongst our client base. In Singapore, Fullerton, Ford. In Australia, Macquarie, Asset Management and others, and clients in Korea and Vietnam.
Okay, thank you very much for that introduction. Last time in our podcast, we discussed about the basics of the Luxembourg Cayman parallel fund model. And I think everybody understood in that podcast that a manager can have a fund based in the Cayman, Fund 1, 2, 3, and I've been engaging in successful fundraising in various parts of the world based on this Cayman structure. In order to access freely to capital within the EU, you need somehow to be AIFMD compliant and being able basically to use the AIFM Passport. Can you tell us more about that? What, in a nutshell, the third-party AIFM model is and what kind of problem it solves for managers that are based in Asia, in the US, or in other parts of the world outside the EU, and that do not have their own substance on the ground in Europe?
Yeah, that's a good question, Stefan. I think you've provided some of the answer there. So in essence, we have the license structure that our clients leverage, and we provide that as a third-party licensing umbrella, if you like, to fulfill and meet the regulatory requirements that our clients have in launching, marketing and operating a fund in Europe. So essentially, it's an outsourced service. So rather than incur the cost, time and effort of establishing their own license structure with the people and capability involved, they outsource that to us for a fee. The reasons? Well, I mean, clearly there's a cost efficiency in outsourcing, particularly for mid-tier managers, small and mid-tier managers, where 36 billion we can have leverage cost efficiencies across our client base and our asset base and pass those cost efficiencies on to our clients in terms of a lower fee structure. So essentially, we can do it for a lower cost than they can often do it for themselves. For small to mid-tier managers, the costs can be quite prohibitive. So this cost of setting up those sorts of capabilities, getting the license, the time to market can be all quite prohibitive. So it's quite attractive for these small to mid-tier managers, fast to market, so faster often for clients as well when actually establishing their own capability. But even larger clients, those clients that have got the financial resources, the scale, the size of the European funds to do it themselves, often outsource it to third-party mancos, third-party AIFMs. A couple of reasons. One might be it's to avoid a strategic distraction. So they consider this as a distraction in terms of management time, effort and resources. They want to focus on core parts of their business. And then secondly, it's outsourced expertise because we've got, as I said, 36 billion in assets we can invest to make sure that we've got a very current market capability across a broad range of assets that we provide to our clients.
So thank you, Danny. AIFMD Passport, definitely one of the core reasons for which you would appoint a third-party AIFM. But as you rightly pointed out, cost, time to market are other advantages that you can benefit from. Now, if a manager based in, let's say, Asia has a Cayman structure, its GP, etc., and wants now to create a Luxembourg-based vehicle, a limited partnership, for example, with a GP and appoint an AIFM and fund side, for example, as AIFM, what are the core duties and responsibilities of these AIFM, and how should that manager expect to interact with fund side?
Yeah, that's a good question, Stefan. So really, look, the core of what we do as an AIFM operating on behalf of our clients is represent them from a regulatory perspective to the regulator in Europe. It's a regulatory operating framework, so it's a live framework. Yes, it's there to protect investors, but also really to create an efficient and trusted, robust fundraising market in Europe. So we see ourselves as playing an important part in that ecosystem. Third-party AIFM duties, there's two main areas. So one, risk management, second, portfolio management. So risk, as you can imagine, encompasses a range of different things. So ensuring that the operation of the fund, the investments, a whole range of things are compliant with the relevant regulations, but also internal documents. So things like investment memorandums and prospectuses. So that can be risk monitoring of portfolio limits. It can be broad spectrum of different risks relevant to that particular fund and investment strategy. So market risks, liquidity risks, credit counterparty risks, operational risks, investment policy, and others. Second main duty, portfolio management. So here the key is to monitor investor management of the fund and ensure that those activities that are conducted from an investment perspective are compliant, both with, again, CSSF regulations, but also with the investment guidelines and prospectuses and investment memorandums. So as you know, Stefan, two key models here for portfolio management: the delegated model, where we as the AIFM can delegate portfolio management back to our sponsor, the client, who then makes discretionary investment decisions. And secondly, which is used less frequently, at least with our client base, the advisory model, where we as the AIFM retain portfolio management and risk management. So we're actually then responsible for that portfolio management function for that particular fund. Again, the choice of those two models seems to depend significantly on whether the underlying client is a recognised asset management licence or holds one. And often in the case where they don't, we'll perform that function for them, but it's less frequent.
Thanks, Danny. I think what is important to bear in mind is the chain of delegation. When you set up a fund structure as a limited partnership, your GP will appoint the AIFM. As you mentioned, the AIFM will be responsible for portfolio management and risk management and may delegate that to an investment manager. In the context of a parallel fund, what we see very often is that on the Cayman side, you have your GP, you have your investment manager, and on the Luxembourg side, you have your GP, you have your AIFM, and the AIFM delegates the portfolio management function to the very same investment manager, which at the end of the day will manage the portfolio that will aggregate underneath the structure. Now, Daniel, we wanted to go and walk our listener through the why, what, and how of appointing a third-party AIFM, covering a bit the AIFM Passport from your perspective, and what are the practical steps to engage an AIFM for a parallel fund setup.
Yeah, so thank you, Stefano. I think it's a good way of framing the question there on the why, the what, the how, and really around why this is a particularly attractive opportunity for our listeners, asset managers, to explore at the moment. There really is some compelling reasons to explore this opportunity in the market. From a market perspective, that there really is this confluence of forces, geopolitical and other, which is creating a very attractive opportunity. So in part, there are these shifts, reallocations of funds away from big markets like the US. Very big market, even small percentage reallocations is creating big pools of capital looking for new homes. There is this shift in sentiment. So it used to be up here across Greater China, for example, it was anything but China. Now it's don't miss China. And I think that's a sentiment reflected more broadly across the Asian market. And just quickly, two sort of trends within the alternative space. So clearly, everyone's seeing globally that there's this significant growth in alternatives relative to more traditional asset classes. I would add to that to say that there's an interesting component of that of investors increasingly looking for accessing alpha through mid-market managers. So if you're a mid-market manager with an alternative strategy that gives interesting exposure to Asia, it's a great opportunity to come to market. From an asset management perspective, the reason for doing this, you've got a reasonable track record over 3 or more years, you've got a reasonable size of AUM and good performance. You want to diversify your investor base and you want to grow your AUM. The European market is really attractive to pursue from that perspective. On the what, a couple of points very quickly on fund vehicle and also investment strategy. I mean, clearly there's so many advantages for a Lux domicile fund vehicle compared to other vehicles. As Stefan's emphasised, this fund passporting just gives you ease of cross-border distribution. I've heard it described as being frictionless. This is what you want to have when you're bringing your fund to market, something that's widely accepted and gives you access to these big pools of capital, a larger investor pool. On the fund's investment strategy, key point I want to make is make it differentiated. So, don't bring a mainstream global equity strategy necessarily unless you have very strong performance in it to the European market, because you'll be competing against a global pool of large investment houses in the market. So bring something that plays to your strengths and actually gives interesting exposure to good investment opportunities within the Asian market. In terms of fund vehicle, a broad range of choices. I think there's just a means of having a discussion with Stefan and I about which one suits your particular investment strategy best. On the how, I mean, clearly this is the purpose of doing this. On distribution and raising capital. I just want to say up front, you want to get a view as an asset manager exploring the opportunity in raising capital in Europe of how much, from who, how quickly, which countries, which market segment. And of course, we're here to help you explore that opportunity, and we've got the capability to introduce you to a range of people for these discussions, both Stefan and myself. And it's a market that actually facilitates that discussion happening. So again, FundSight's positioned to provide access to these sorts of discussions and partners. On the distribution side, that the European regulator has a pre-marketing framework which facilitates this sort of exploration as well. So in short, look, it's a wonderful opportunity if you're thinking about broadening your investor base and raising more capital to explore the opportunity to raise in Europe.
Thank you very much, Danny, for those insights. To wrap up, the third-party AIFM model is a powerful and efficient solution for non-EU managers who want to access European institutional capital through a parallel fund structure. It provides regulatory license, the governance framework, and the distribution passport, all without requiring the manager to build its own European platform from scratch. In our next episode, we will be exploring parallel fund structuring from a fund sponsor's angle. Do join us for that. And in the meantime, thank you for listening, and thank you, Danny, for your contribution.
Thanks, Stefan.